But the FUD, the fear, uncertainty, and doubt, is spread every single time there's an innovation in technology that threatens incumbents' livelihood. So you can go back to the internet, right? AT&T and Verizon tried to kill, literally, the internet because they culture of the future of financial services.
For sure.
So now next up is Ethereum. Well, Bitcoin is better money, right? It's a blockchain application for digital gold, or as Michael Saylor says, digital property. That is the future of money. Okay, great. Ethereum's different. Ethereum is the future of global compute. And you've heard, Sam Altman and others say that compute is the most valuable asset in the future. And that's true. And eventually it will be invisible, right? Like, I can't explain to you, Paul, how I can talk into this metal and glass box on my desk and you can hear me and see me in real time in HD. I would say a guy with a face for radio would like if it wasn't so HD. But I can't explain how that works, but I don't need to, because it does. It's invisible. And I can't explain to you exactly how a hash is created for cryptography to work, but I don't need to. I just need it to work. And I need to know that once we have truth on chain, whether it's new technology adoption, whether it's new chips, whether it's new products, and then some of them will sell the news. And so you'll get this run up in price. And then if it doesn't happen, or it does happen, they'll sell out of fear. If it doesn't happen, they'll sell out of, I'm going to take my profits if it does. And we saw that after the Bitcoin ETFs, and then they went back up. And now there's been some, downside pressure. Ethereum ran along with it, got all the way up over $5,000 and, or $4,000, sorry. And now, bam, it's back down again.
Well, I think the key here, as we see, disruptive technologies that you're alluding to really kind of start to take hold around the whole process of the financial system. And I think the difference point, and I've talked about this before, is this is now money. This is no longer, the disruptive technologies of the internet, even though that really disrupted communication, which is another big issue that we're now facing, including all governments around the world, around freedom of speech. This was a good tweet here from Scott Melker over there at Wolf of Wall Street. Shout out to Scott. BlackRock is launching their tokenized asset fund on Ethereum. At the same time, they seeded with $100 million.
That have a great deal at stake if they are disrupted. So it's not surprising to me that she would craft legislation to slow down the disruptive technology. Okay, the fact that it's an election year and that she's, look, show me who said it, show me the incentive, I'll show you the outcome.
There you go.
That is the way the world has always worked. And here's the problem, political problem, as I see it. It costs, from what I've read and studied, about $100 million to secure a Senate seat in the United States. $100 million. Most of us don't have that. So if we want to run, unless your name is Meg Whitman, who spent $103 million or $108 million, I can't remember, of her own money.
Yeah.
She lost, unfortunately, but she spent over $100 million of her own money. Unless you're her or someone like her, you have to raise $100 million. Well, it turns out if people write you $1, $10, $20, $50 million checks, Paul, they expect something.
Yep.
And that's the way our system works. Really, really wants it to happen.
Yeah.
It'll happen.
Yeah. Maybe
because I think they have a bigger stick. I think they do have a bigger stick than the current chairman. Let's say, I think it's highly unlikely before the election, because the current guy was appointed by the current administration.
Right.
And so he's going to do what he has to do to stay. Now, if the administration were to change in November, How quickly would they replace, the SEC chairman? Probably pretty quickly. How quickly would that person, do I think the ETH ETF is high on the agenda? No, I don't think it's the bottom, but I don't think it's the first thing they would do.
Yeah. Well, it's interesting to see, I think, the evolution of our financial and the monetary system. When you look at BlackRock's success that they've had in just a very short period of time, and I won't say BlackRock only, it's really the 9. I mean, you've got to look at Fidelity as well, even to a certain extent, ARK. This is a major move. This was
April, as people realize, oh, geez, I got to pay taxes on all that crypto that I traded last year because it was up, 155%, and there's natural selling, and so that in the short run swamps the inflows. You got the added challenge that GBTC made a decision, which I don't fault them for, in terms of being money grabbers. You got a captive audience, most of which came in at 6, 8, 10 grand Bitcoin, so they have huge capital gains. If they sell, they're going to incur big taxes. So it was highly unlikely they were going to sell right away just to save 100 basis points. But if it was in a not-for-profit account, an IRA, a retirement account, those were going to get sold, and that was bang, bang, bang the first few weeks of withdrawals. Now there's some arbitrage going on out there that push the price down so you can buy it at a cheaper price.
Yeah,
and whether it's George Soros or Julian Robertson or Paul Tudor Jones or Goldman Sachs, that's been done for centuries.
Sure.
And so this idea that somehow, as soon as the ETFs were approved, we're going to be up only, and there was going to be none of, because look, if $1 billion comes into the ETFs today, and I don't know if that'll be the right number or the wrong number, but let's call it 500 million. 500 million comes in, and a bunch of it goes to IBIT, the BlackRock. They at 359 today will, they'll set the price for their ETF, and then they have to go acquire X Bitcoin, however that is. The problem is only 900 Bitcoin get created today. If they got to go buy 1,000 Bitcoin, that's more than 900. So they got to go convince someone to buy it.
Yeah, got to go to the market
or to sell it.
So, Mark, when you look at outside Bitcoin, we've talked about Ethereum, Bitcoin. I think everybody within our audience, to a certain point, maybe you're new to the show. If you are, make sure and hit.
Think about Visa, super fast,
very vulnerable,
very vulnerable. Ever had to get a new Visa number because someone stole your card?
Constantly.
Yes. So think about Solana, super fast, but it breaks down. In fact, this past weekend, I heard reports that 80% of transactions were failing. That's a nightmare.
Yeah, there was
that's a total nightmare.
Quite a bit of transactions. The growth of their meme tokens within the SPL tokens kind of exploded over the last week. Yeah. So that's part of it.
But the flip side of that is, well, that just means more and more people are going there, and that's good long term because break some things, then fix them, then break some things, then fix them. I got that. Yep. And here's an interesting question. Ethereum changed some things about the way it operates different than Bitcoin. And the Bitcoin maxis say that's all wrong, right? Proof of stake, that's bad. That could be corrupted. You need proof of work. To be money by proof of work, I could make that case. But we don't have a great L2. We have Lightning, which is okay, but it's not robust. It doesn't scale enough. We don't have L3. We don't even have L4. Is that going to get developed? Maybe. Mm-hmm. But what about this proof of stake thing or proof of history thing? Well, those are ways to speed up transaction processing. Okay, but what's the downside? Transactions can fail, things can break, they can get lost, they can get hacked. I talk about this all the time. The Chainlink guys hate when I talk about it, but I can envision a world where there's a bunch of L1s.
Yeah.
Right? You got Bitcoin, you got Ethereum, And the retail chain